You have extra money, and you're about to make the biggest financial mistake of your life by choosing to pay off debt instead of investing. It sounds right, sounds ethical, sounds safe, but that very safe choice will kill your financial freedom. In this video, we'll destroy the outdated mindset around debt, expose the hidden danger of being debt-free, and show you why the wealthy never wait until their debt is gone to start investing. This isn't a choice between right and wrong. This is a choice between permanent poverty or unstoppable freedom. Now, set emotions aside. We're about to uncover the raw truth behind these two seemingly opposite strategies: paying off debt and investing. Invest or pay off debt. This decision could keep you poor for life. Many people assume this is a simple question. If you have extra money, should you pay off debt or invest? But if you pause and truly understand the consequences of each choice, you'll realize this is one of the most critical financial decisions you'll ever make. A seemingly small choice can cost you hundreds of thousands, even millions in the future. It's not about lacking money. It's about not knowing how to use it at the right time and in the right way. If you choose to pay off debt just because it feels right, you're reacting emotionally, not strategically. The relief of having no debt is real, but it won't make you rich. It's a choice that keeps you stagnant, while others are accelerating with investments. Finance doesn't reward obedience. It rewards those who use time and money as tools. You don't need safety. You need freedom. And freedom comes from growth. Choosing to invest means your money works for you. Choosing to pay off debt first means delaying growth while time, your most valuable asset, slips away. For example, if you invest $1,000 per month instead of paying off a low-interest mortgage early, you could have nearly $2 million in 30 years. Paying debt helps you survive. Investing transforms your life. This isn't about choosing what's right. It's about choosing between safety and wealth. Without an emergency fund, no strategy matters. Paying off debt or investing sounds smart until a financial emergency hits and you have no cash to cover it. At that point, you'll either borrow again or, worse, pull money out of your investments. That's not financial strategy. That's survival mode. An emergency fund is the only foundation strong enough to build any financial plan on. Without it, every plan is a castle made of sand. One wave, and it's gone. Imagine your car breaks down, you lose your job, or a medical bill hits unexpectedly. No emergency fund. What now? Sell investments at a loss? Withdraw when the market's down? Take on predatory debt? That's not smart. That's panic. The rule of 3 to 6 months of expenses isn't fluff. It's your financial immune system. Don't go into battle without armor. Don't build wealth without a shield. Here's the hard truth. Many people rush into paying off debt or investing the moment they have a little extra cash without laying a proper foundation. It's a fatal mistake. Any profit you make can vanish in a single moment if you're forced to liquidate assets under pressure. Even a dental emergency can destroy your portfolio. The emergency fund isn't optional. It's essential. Without it, you're not investing. You're gambling. Paying off debt helps you survive, but never makes you rich. People glorify being debt-free as if it's the ultimate win. But let's be real, that's just climbing out of a hole, not reaching the summit. Paying off debt doesn't generate income. It just stops the bleeding. You feel relieved, but your pockets are still empty. You're not moving forward. You're just no longer moving backward. And the mindset of, as long as I'm debt-free, I'm okay, keeps people stuck in financial limbo for life. A person with no debt but no passive income is still dependent. Without investment assets, you're still trading time for money. You are not free. Being debt-free means you're unchained, but not flying. The difference between someone who pays debt and someone who invests is like surviving versus building a kingdom. One says, I owe no one. The other says, my money works for me every second. Same dollars, completely different destiny. The harsh truth is, you can live honorably, owe no one, and still die broke if you never learn how to make money work for you. And that's what no one teaches, because no one wants you free. Financial freedom isn't about having no debt. It's about building income-producing assets. Those who understand this don't wait to be debt-free to invest. They build cash flow even with debt. That's the real game. Investing while in debt. Reckless or strategic leverage. Most people immediately react, you can't invest while in debt. But the reality is different. If your debt has a low interest rate, say under 5 cents, then investing that extra money can earn double or triple that. Investing $1,000 per month over 30 years could bring in over $2 million at a 10% return. Meanwhile, paying off 4% debt saves only a few thousand a year. Here's the truth. People who lack financial education see all debt as bad. Smart investors ask, does this debt cost more than what I could earn with it? Not all debt should be killed off early. Some, like low-interest mortgages or student loans, should be kept while you use your cash to build wealth. Paying down 4% debt while skipping a 10% return isn't saving. It's rejecting opportunity. What makes this mindset controversial is that it goes against traditional teachings, but tradition doesn't build investors, it builds obedient workers. If you want to break out of the system, you have to ask, is paying debt smart or just a reflex? Those who leverage cheap debt to invest wisely aren't reckless, they're strategic. They don't fear debt, they weaponize it. Where does real risk actually lie? People often use the word risk to shut down the idea of investing, but ignore the hidden risk of not investing. Paying off debt sounds safe, but the price you pay is the opportunity cost. Choosing to save 5% interest by paying debt means you also walk away from 10% or more in potential investment returns. You don't lose money, you lose your future. And in finance, losing compounding time is like cutting off the lifeline of your wealth. If you invest in something like the S&P 500, history shows an average return of over 10% per year. Yes, some years are negative and people panic, so they go back to what feels secure, debt repayment. But security doesn't equal optimization. From 2000 to 2002, markets fell, but from 2003 to 2007 they rebounded strongly. The question isn't whether risk exists, the question is, can you stand firm long enough to earn the reward? Or will you flee just because the market makes you uncomfortable? Paying debt offers guaranteed but limited returns. Investing offers unlimited upside with calculated risk. If you're sitting on high-interest debt like credit cards, pay it off immediately. But if you're holding a 4% mortgage while the market averages 10%, then the bigger risk is not investing at all. The smart know how to distinguish risk from fear. Risk doesn't live in the market. It lives in how we avoid growth disguised as safety. Real-world test. Pay off or invest. Who wins? Let's get past the theory and look at a real-world example. You have a $350,000 mortgage with 30 years remaining at a 4% interest rate. If you throw an extra $1,000 per month at the principal, you'll pay it off in 14 years and 5 months. Feels great, right? But here's the twist. After becoming debt-free, you then invest that $2,671 monthly, your mortgage plus the $1,000 extra, for the remaining 15.5 years. Your total investment after 30 years? About $1.2 million. Subtracting the interest paid, your net wealth lands around $1.9 million. Now let's flip the script. What if instead of paying down debt, you invested that $1,000 monthly from the start, while just making your regular mortgage payments? After 30 years, your investments would grow to around $2.17 million. Even after higher interest paid, you're still left with $1.92 million in net value. The difference between both strategies? Over $826,000. That's not a rounding error, that's the price of delayed investing. Finance doesn't reward urgency to pay debt, it rewards mastery of time. If you invest early, you multiply wealth. If you wait until debt's gone, you might already be late. Don't trade compound growth for emotional relief. Don't just beat debt, obliterate it with strategy. The truth about mortgages: enemy or tool. Many view a 30-year mortgage as lifelong bondage, but in truth, it's not a burden. It's one of the most powerful financial tools you can use. With rates as low as 3–5%, sometimes even below inflation, you're practically borrowing for free. What's better than using cheap money to invest in appreciating assets? Good debt doesn't enslave you, it serves you, if you know how to command it. What makes mortgages special is the time horizon. 30 years gives you an enormous runway to use leverage wisely. While others obsess over paying off their mortgage early to feel free, the strategic thinker keeps the debt and redirects their surplus into investments. When the return exceeds the interest cost, you're turning borrowed money into future wealth. That's not debt, that's working capital. Here's the hard truth. Aggressively paying off good debt can cost you hundreds of thousands in lost investment returns. Not all debt should be eliminated fast. Some should be managed long-term, allowing time and inflation to shrink it naturally. Meanwhile, your assets grow. The old idea that no debt is good debt is a relic. In this age, debt is not a chain, it's a lever. If you know how to pull it. Inflation, enemy to the fearful, ally to the wise. Everyone knows inflation erodes the value of money, but few realize it also silently erodes the real cost of fixed debt. Take that same $350,000 mortgage. After 18 years of 4% inflation, your monthly payments are effectively worth half as much. You're paying back your loan with weaker dollars. Inflation, often feared, is actually working for you if you understand the game. As inflation eats away at purchasing power, it's also eating away at your debt burden. This is a hidden advantage they never tell you because they don't want you to win. You repay that fixed loan every month with dollars worth less each year, while your investments rise with or beyond inflation. For those who use debt wisely, inflation is not the villain. It's the invisible assistant helping you repay quietly. If you rush to pay off low-interest loans because you fear long-term debt, you're throwing away this benefit. You're using today's strong dollars to pay what could have been handled later with weaker ones. Smart investors pair fixed debt with inflation-driven assets. The fearful run. The wise let time and inflation do the work for them. The right mindset. Don't pick sides, build strategy. While the crowd argues about whether to invest or pay off debt, the strategic mind chooses neither side. They choose both. The truth is, you can do both if you understand how to prioritize. High-interest debt like credit cards? Kill it first, it's bleeding you dry. But a low-interest mortgage? Let it sit. Redirect that extra cash into investments. Wealth doesn't come from picking sides. It comes from knowing when to pivot. The binary thinking of either invest or pay off is a trap that makes you miss out on your full potential. In reality, you can create a hybrid strategy. Allocate part of your income to reducing debt and the rest to building wealth. This approach eases financial pressure while activating compound growth. You don't need to be extreme. You don't need to be debt-free to begin investing. You just need the clarity to realize your money should be working, not sleeping. Long-term thinkers don't act emotionally. They act with data, logic, and deliberate execution. They don't panic about debt, they manage it. They understand that every dollar invested today could multiply into tens or hundreds tomorrow. And they don't allow bad debt to linger either. They balance both forces, knowing when to tighten, when to deploy. That's strategic intelligence. That's how you win, not by choosing sides, but by orchestrating both fronts. Financial freedom isn't for those who only repay. Here's a painful truth. If you spend your whole life just trying to pay off everything, you'll never build wealth. You'll have no assets, no passive income, no freedom. Successful people don't wait to be debt-free to start investing. They build wealth while carrying the weight, because they understand freedom doesn't come after the burden is gone. It comes from building assets despite the burden. They don't wait for the storm to pass. They learn how to sail through it. The belief, "I'll invest after I pay everything off," is chronic financial defense. You can live debt-free your entire life and still die without a dollar that earns for you. You might leave this world clean, but broke. Meanwhile, those who invest early, even modestly, reap exponential returns. The difference isn't how much money you start with, it's how you use your time. And time doesn't wait for you to be debt-free before compounding begins. Financial freedom is reserved for the proactive, not the passive. The free don't fear debt, they control it. They don't avoid risk, they assess it and execute. And above all, they invest early, consistently, and with strategy. This isn't blind risk-taking, it's calculated liberation. If you truly want freedom, start planting now, even if you're still in debt, because no one escapes the cycle by repaying forever. You break the cycle by investing through it. Paying off debt won't make you rich. Waiting too long to invest will cost you everything. And if you keep believing that you must be debt-free before you build wealth, you're burying your own future. The free don't wait for perfect conditions, they use imperfect momentum. Now you know the truth. Financial freedom isn't about repaying debt, it's about making the right move at the right time, even when debt still exists. The question isn't where you are today, it's what you choose to do from this moment forward. Wealth or struggle, it all starts with a decision, one that only you can make.